If trading is complicated for you, then don't worry, because here at Secrets to Trading, our main goal is to show you easier ways to actually learn how to trade. And in this video, we're going to be looking at a simple but effective strategy that you can use on the 1 minute chart. Now, I've been using this primarily on Solana because there is decent swings on Solana. All you've got to keep in mind though, that is if you use it for Forex or for any sort of commodities like gold, that it might be a slightly different strategy to the one I'm explaining right now. So firstly, I want to show you the two indicators that we want to use. The first one is the Linear Regression Candles Indicator by this person right here. Now, what I was setting up for was to see if it was going to go for a reversal in the night time of this Tuesday, as there was multiple times in a little bullish trend where it kept on trying to go up, and in the afternoon it reversed all the way down to this level right here. And you can see right here that it didn't get pushed all the way up, even though there was a lot of buying pressure in crypto. What I knew is that if it broke in between this level here, that it was going to be a massive sell-off, and as you can see right here, there was a massive sell-off. Now, when you use this indicator, make sure to go over to this section right here where the main candles are on, click on the little dots where it says more, and then go all the way down to the hide option. Now, as you can see here, every time that the price goes below this average, but every time the price goes above this little white line that is an average, the price goes up. This is why the linear regression candle indicator is so great, because it's more likely to show you which way the price is actually moving compared to normal candles. Normal candles are harder to read, whereas this one just makes it a lot simpler, especially for beginners. So the red candle means that it's in a downtrend. So it's easier to predict future price movements that are going in a downtrend just by viewing this section right here. The green candle simply means that it's in an uptrend, as you can see right here as well. These candles are just a lot easier to understand than normal candles, especially when you're a beginner trader, because it simply shows you a more clear version of how the market is actually moving compared to normal bars. This is very similar to other indicators, just like the Hikinashi indicator, but it uses a concept from maths called linear regression. I am no mathematic genius, so I don't know the ins and outs behind everything. We have to make sure that the settings are correct though. So we need to go into linear regression candles. You should see that the signals moving should be 11. You want to change that to 7. And then you should also see that there is a simple moving average here. You can change this by clicking on this one just to activate the exponential moving average. Now, the indicator on the bottom that you can see is the wave trend oscillator. You can use many different versions of this indicator because there are tons that are out there, but this is the one that I'm using, WTX. For this one, I've not really adapted the settings too much. As you can see, they're all in a different language, so I'd have to get Google Translate onto it to understand what that is. This indicator, compared with the linear regression candles, is a very simple and effective way to actually make money from scalping. Scalping is a trading system where you're really quickly in and out of the market. So let's look at these trades right here just to see where we'd make our money from. As you can see at the bottom, this is where the sell-off is basically exhausted. When the sell-off is exhausted, it will be in this green section at the bottom of the wave trend oscillator indicator. When the uptrend is exhausted and it's about to turn around, this will also be in the red section of this indicator here. This sell-off was completely exhausted as there was so much volume pushing it into a downtrend. And when you can see this section right here, it means that there was going to be a lot of buy volume that was going to come up. However, it only reached the middle section here that didn't manage to push up for another swing. When you see the red candles indicating a downtrend and also seeing the fact that you've got a red line here, this basically means that it didn't manage to do a full buy and is being pushed all the way down. So this was an indicator again for another sell trade. As you can see, the sell-off was exhausted once again, showing and highlighting in the wave trend indicator down here, and you started to see it being pushed up all the way again. But this time where it was being pushed up, you start to see the candles moving a lot further than they did right here. So this is a high indicator that after it is exhausted slightly, uptrend is exhausted slightly, that you can tell that it's going to be pushed up even higher again. So this strategy is really simple. It's all about just jumping into the market at the bottom of the wave trend oscillator and at the top if it's a short trade. And when you start to see the opposite candle, that just essentially means that it's time to close your trade. Let's take this trade for example that you can see right here. This trade is in a downtrend, but it's actually hit a level of support. Now, as you can see, the downtrend in the 1 minute time frame has been exhausted and it's starting to turn around. But the question is this going to be a full-on buy? Because you can see a double top and the slight red candles, this means that it is going to go for a further sell-off. So what you would do if you were looking to make another short trade is you would wait for the buy to be completely exhausted and then enter another short trade. But if these red candles weren't here, then you'd just enter for another buy trade. We're checking the trade a day later, and it did exactly what we said. It tried its best to try and push for a buy and then went down once more, hit this level where there was a lot of support right here, and then bounced all the way back up. So as we said, like, you'd be looking for a buy trade after this sell, so you would have made a decent amount of money if you decided to do this short trade right here, and then you could have jumped in for another buy trade again and rode it all the way up, which was probably about a 4% price move here on Solana. And the best part about this strategy is this was only within a couple of minutes, like within 20 to 30 minutes, you would have been able to make 7% using a short trade and then a buy trade. This method is quick and easy. It's not really time consuming to do. It just requires a lot of market analysis. But as you start to do this and practice this strategy, your understanding of market analysis and looking at price charts is going to improve. Thanks for watching this video. If you enjoyed, make sure to leave a like, subscribe to the channel if you haven't already, and make sure to check out our website for discounts on your favorite prop firms.